Hello, I'm here with Pier Carlo Padoan, who is the Deputy Secretary-General of the OECD and the Chief Economist. Thank you very much for being interviewed by us today.
My pleasure.
Now, when I last spoke to you, it was at a conference at Credit Suisse. There was, I think this crisis is an ongoing one. At the time, we were worried about Greece. Since that time, it's moved on to Spain and Italy to some extent, and now Cyprus. And at the time, I said we probably need ultimately to get the ECB to backstop the system for the systemic problems to go away. And then, of course, Mario Draghi came up with his whatever it takes statements and the OMT programs. So it seems as if the authorities are moving in the right way in an institutional sense, but there are still these new problems. We've got Cyprus. What do you think can and should be done at this juncture?
Well, certainly after Mario Draghi made the statement and introduced the OMT, and the Greek crisis was dealt with, and talks about European Banking Union have kicked off, we have seen those so-called tail risks go away, meaning that there is less of a risk of a breakup of the euro area. But at the same time, we're seeing that producing a functional monetary union takes more than that. We need to speed up banking integration. We are working on having a single supervisory authority, which ultimately will be the ECB itself. But then we need a banking resolution mechanism and a deposit insurance mechanism. This is what we get out of the Cyprus crisis, which is a unique case, but still it points to flaws in monetary union.
Yes, well, in fact, it does point to flaws because even if you have a deposit insurance guarantee, well, first of all, it can be eliminated if the government decides to eliminate it. That's why, even though the Cypriots themselves ultimately rejected that decision. But the other problem is something you pointed to earlier, which is that you can't have a credible deposit insurance scheme, to me, it seems, without the backing of the ECB, because ultimately you need the currency issuer to backstop the system.
Well, you need resources to be credible, to have a crisis resolution system, backstop for banks when they have to be resolved. And you also have to have credible resource commitments for deposit insurance, which, however, must be the same for all members of monetary union. And the ECB is going to have a leading role in supervision. This is very important as well. So we're moving towards a full-fledged monetary union. We're still not there yet, and this is the main point. We are in a situation in which you have to keep adjusting the engine while driving the car, and the road is bumpy.
Yes, it's like driving along the Amalfi Coast, actually.
Yes, not as pleasant, maybe.
But of course, as far as I understand now, what's been agreed is that the ECB will supervise the largest banks, the 23 largest banks within Europe, but that there is still tremendous resistance nationally to having an overall supervisory capacity by the European Central Bank.
Yes, well, we have in Europe a full set of institutions is going to be looking after the banking system. Of course, the ECB will be there, but also the European Banking Agency will also look at the requirements that banks have to fulfill in terms of capital adequacy, which is also very important. Let's not forget that one of the problems that the euro area is facing is not so much whether or not there is enough liquidity, but whether that liquidity goes where it's needed, meaning mostly in the periphery. And that implies having more trust in the national banking systems. We are still in the paradox of having a supranational monetary union with national money markets, which is a paradox, a contradiction that has to be addressed.
And that ultimately can only be resolved, it seems to me, through some form of permanent fiscal union. But to extend your analogy, we're constantly trying to change the motor while the car is driving at 50 miles an hour down a dangerous coast, and it's hard to achieve. The markets seem to be wanting that to occur within, say, a relatively limited time frame, and yet you're dealing with centuries of history. It's very, very hard to make institutional changes of that magnitude in the period of time which we're looking at.
I agree, but also let's see it the other way. The glass may be seen as half full. The speed at which institutions have changed in Europe in the past 24 months is astonishing if you take an historical perspective. Of course, this takes place at times of crisis, which is a catalyst of change, as we know very well, but also a problem. I am confident of the fact that as the macroeconomy improves in the euro area, and especially as the employment situation improves, consensus for reform will be stronger. But also, there is a risk that there is going to be complacency down the line. So we have to manage. We need very strong and vision endowed leaders to keep the engine going and changing at the same time.
Can we get an improvement in unemployment if we continue to impose fiscal austerity across the continent?
Well, the issue of unemployment in the euro area and in Europe is more about long-term structural issues than the short term. Of course, we are in a recession in a number of euro area countries, including my own, which is Italy. And we also have to admit that structural change, which is important for long-term growth, needs some demand facilitation to be activated and produce results. But the results are being achieved not so much in terms of unemployment reduction, but in terms of adjustment. In the periphery, lots of countries like Spain, Ireland, Portugal are achieving those improvements in competitiveness which are needed to go back to sustainable growth once the crisis is over. It's a narrow path, it's a difficult path, but it's a path that needs to be taken, because otherwise we don't just stand there, we go back.
Let me go back to the question of banking union again, because I think Cyprus has highlighted one of the problems. I'm a Cypriot, and I've just taken a major haircut as a result of my uninsured deposits being converted. What happens the next time there's a problem in, say, Spain or Italy? I mean, isn't there a likelihood of a deposit flight being triggered?
Well, if you have a big deposit in Cyprus, I bet you're not from Cyprus. I bet you're from a non-European Union country. So maybe you have a different set of choices. If you are in Spain or in Italy and you have a big deposit or you have several deposits, I guess the question you would have to ask yourself, is the country as a whole sustainable? The ultimate issue is whether Spain has a sustainable economy, growth perspectives and sustainable debt, and the same can be asked of Italy. The answer is they're getting there. Yeah. So my ultimate belief is that you can have a large debt, you can have low growth, as long as you have perspective of reducing that debt and improving your growth perspectives. And this is the challenge for both Spain and Italy and other countries as well. Cyprus, I agree with those who say that Cyprus is a unique story, not just because it's small, but because its financial system has been set up in flawed ways to produce an unsustainable growth, which has led to domestic booms, in addition to unclear and non-transparent reasons why a lot of money has been put in separate banks.
Well, let's hope that they don't become the template for the entire European Monetary Union, and that they are just the anomaly. I think we'll leave it at that, and thank you very much for agreeing to be interviewed by us again. It was most enlightening. Thank you.
Thank you.